I would like to start by saying that Davidson had joined the Restart Rail family, and we want to thank you, and please pass on our thanks to him as well. So please introduce yourself and tell us a bit about your fund and exactly what you do.
I'm just giving a short intro. I'm Inga, I'm the IR manager of Davidson W, and this is Anvar, a partner at the fund. Our founder, Davidson, who lives in Tel Aviv, he cannot, unfortunately, not be here today. But he moved to Berlin almost 20 years ago to run the venture capital activities of the SAP founder, and then shortly discovered that there's a huge lack of venture debt in Berlin or in the German landscape. So he founded his first venture debt fund almost 10 years ago, and we both joined shortly after. And we are currently running our second fund, operating from Tel Aviv and Berlin. So we are a small but global team, and bridging the, I believe we heard about it before, the cultural gap between Israel and Germany. I think our team pretty much closes the gap. And yeah, Anvar will tell you a little bit more about our product and the venture debt investments.
Thank you, Inga. So venture debt, I think it's not a new term to many of you here, but for the ones who don't know, venture debt is just another, let's say, way of funding a startup, providing liquidity, but unlike venture capital or equity, it comes without or less dilution, right? So why do we say that equity is just a very expensive loan, right? Because when speaking about venture debt or venture capital, we usually oversee the costs of providing equity is the dilution. That's the key word, right? Because that's basically the return you or the share in the company you give up in order to fund the company with equity, and we provide liquidity without this dilution. But equity and debt should not be substitutes, right? They complement each other well, and there are different stages for the companies to work with venture debt. So venture debt, there are several use cases. One is providing or bridging the valuation gap, right? When equity investors, new equity investors and existing equity investors do not align on the valuation, right? So that's one use case. Second use case is supporting capital-intensive CapEx projects with different companies. So that's another. And one of the use cases we see even more often nowadays is buy-and-build approach, where we support companies with conducting M&A activities using loan when they acquire another companies.
So who is it for, and how can it be used as an effective tool, specifically in high-tech investments?
It's a good question, especially when we try to basically build a bridge back to Israel, which is the main topic of this conference. Is we see the main value is in venture debt, in supporting Israeli founders in geographical expansion, right? So we know that Israeli founders think globally, they have global ambitions, and that's exactly what we do. Actually, in our portfolio, we have two great examples of when we did exactly that, helped the companies to launch new markets. One of those is Gauzy, right? We supported, we actually complemented the equity round. We joined forces also with a hedge fund in a bigger loan that we usually do. And Gauzy is a smart glass manufacturer, and we helped them acquire French competitor, basically launching the French market, and now Gauzy is a Nasdaq-listed company. That was one example. Another example, which is also, I think, has to do with resilience that was mentioned several times during this conversation and conference, is Move, or Holiday Heroes. It's a travel tech company based in Tel Aviv with portals like Holiday Finder. We helped the company to jumpstart the expansion in Germany with Holiday Heroes. So it was also very sensitive, let's say, or even dramatic deal for us, because we were able to, we finished all the documentation, loan documentation with the company in September 2023, right? Then the attack happened, and we were very fascinated by the founder who didn't blame the markets, who didn't blame the consequences. He just kept on fighting, which was, again, right, very representative of Israel as a country, Israeli people. and we just couldn't miss out on this opportunity. And sometime later, we still kept contact and then provided the loan to this company in January 2024.
Interesting. So you mentioned Israel and Israeli founders several times. So maybe if you can explain why you believe that specifically it's relevant for Israeli founders and investments in Israeli high tech, and maybe also speak a bit about the scope of the fund and what sort of work you do as far as the scope of your work.
Yeah, sure. So we as a fund, we usually provide term loans, right? We have different tools or different types of venture debt, right? Ranging from convertible loans over to revenue-based financing to term loans. So we as a fund provide term loans. We provide those usually for 2 to 4 years. And in this particular case, and what was relevant for us within these two companies is our, let's say, international footprint that my colleague Inga mentioned, right, where we have basically, we're present in Germany, we're present in Israel, and we're basically helping build those bridges.
And the scope of the investments, I mean, can you say something about the scope of the fund and the money monetary-wise?
Sure. So currently we're investing from the second fund. It's over 70 million in capital commitments. We're usually providing loans up to 10 million per company, 3 to 5 million in the first step. And that's it.
Excellent. Thank you very, very much. And please pass on to Iran our thanks as well for supporting.
Thank you very much.
Thank you.
Toda.